From Daily Forex, this is Chris taking a look at the US dollar Mexican peso pair. You can see I have moved from a sideways range to what could potentially be a pennant here. This is a very negative candlestick formation here, and we haven't kicked off yet, so we're getting a little ahead of ourselves with this. But we have the death cross here, the 50 going below the 200-day. And when I zoom out, you can see that if we do break down below this and the uptrend line, so again, there's work to do, we could very easily, I could just go ahead and extrapolate this down, go down to about here, right around 17.5, maybe a little bit lower, possibly even as the 161.8. I don't know that we make it all the way down there, but think about why this could happen. We've got a Federal Reserve that is suddenly somewhat neutral, if not even dovish, possibly. We have a Mexican peso that offers over 8% interest rate, so it's a bit of a carry trade. And with the Federal Reserve being a bit dovish, that does impact the US dollar. It impacts people going out looking for yield. And then beyond that, we have inverse head and shoulders in both major grades of oil that I follow, meaning that they could break out, which would be good for the peso, as there's a huge oil industry in Mexico. So there's a real good chance that this, what looks like a ridiculous move to contemplate, could kick off. That's not to say this will be easy. This is a long-term call. But right now, it looks like the sellers are certainly in control. And I would assume so until we broke above the 200-day EMA, which is at about 1940 right now.